Got it. So, Kim, if I understand correctly, active income is for real estate professionals, and passive income is for non-professional investors. Is that right?
Yeah, so let's say if your income comes from a real estate qualified, activity like maybe a real estate broker or a real estate agent, then that's going to be active. Or
Right.
if you, like in the case of this example I gave you where there's the doctor and then his wife is a real estate person,
Hmm.
maybe they invest in real estate and she manages their own real estate investments. She would have to spend 750 hours a year in order to reach that status, right? That real estate or rep status, real estate professional. And so then if she is qualified under that 750 hours or in her profession, then that becomes active for her. So all of her income is active and all of her losses are active, which then offsets his income if they are married filing jointly. Okay, so it's a little bit confusing. I know we're getting into a lot of tax issues, but they are really important to understand how you're structured and whether your income is passive or active and how it's going to impact you.
Thanks for joining us today. You can find more episodes at therealworkshop.org.